ZipRecruiter is going public via a direct listing. The valuation could be as low as $3 billion or as high as $5 billion. They are one of the most effective recruiting software platforms on the market. And in today's video, we're going to break down the bull and the bear case. We'll give you some comps, their competition, and who they might actually be like. And we're going to talk about whether we would hire on ZipRecruiter.
It is Monday, May 24th. This is the Piper Rundown. We analyze business and culture to help you win. Today's rundown is presented by JetStore. JetStore has been providing affordable, reliable, and easy to manage data storage and cloud solutions to over 4,000 customers worldwide for over 26 years. JetStore offers storage systems for private cloud hosting, video surveillance, Internet of Things, AI, machine learning, edge computing, data archiving, HPC, media production, medical imaging, and flight simulations. That is so much stuff that they can help you with. For more details, please visit jetstore.com. Thank you for sponsoring the rundown.
Hannah, what does your shirt say?
It says grateful. It's kind of hard to read.
That's okay. For those of you that couldn't read it, it says grateful. I'm very grateful that I am not on the job hunt, that I have this cool position working with Piper, making the Piper Rundown.
That's why I'm wearing the shirt.
That being said, I'm also grateful that ZipRecruiter exists because one of the numbers that they've shared in the lead up to their direct listing is that they've helped more than 100 million people get jobs.
That's wild.
That's crazy.
I mean, they are the person that you think of whenever you think of hiring or recruiting.
And that's what we're going to explore in today's video. We're going to talk a little bit about their valuation, some other comps in the job placement, job board type of market. We'll get to a bull and a bear case, but to give you the basic facts off the bat, ZipRecruiter, there's a little bit of less clarity as to what the initial share price or valuation will be because it is a direct listing as opposed to an initial public offering. For those of you that don't remember, the difference is you are not raising capital for the company when you do a direct listing. It is early investors, early employees avoiding a lockup period where they can't sell their shares for the first 3 or 6 months, being able to go directly to the public market with some segment of their shares. Also potentially lower bank fees paid by the company as they go public. We've had a string of companies do this recently. We just talked about Squarespace the other week, but Coinbase, Spotify, Slack, Roblox. This is a power move where you in some way, shape, or form have a profitable business model or have raised so much money in private markets that you have no need for additional capital to come on. In general, at the margins, it's usually a power move when you see something like this. ZipRecruiter seems to be in that boat. The company was founded in 2010, 4 co-founders, and is based in Santa Monica, California. So a couple narratives here. Some people have started to talk about the center of startup success, either just in general, dispersing from Silicon Valley, but even with some characters like Peter Thiel and Founders Fund and other characters moving down the coast towards LA away from San Francisco. This is down the coast away from San Francisco towards LA. This is a company from that arena. They have really strong margins. Their revenues are flat-ish. 2019, $426 million worth of revenue, $418 million in 2020. Obviously, a period in that year where almost no one was hiring, so it would make sense that there was a little bit less revenue there. But in 2021, they only reported their first 3 months revenue so far. They are on pace for $500 million worth of revenue. And very importantly, this is a company that can and has operated profitably. In 2019, they lost $6 million on that $29 million worth of revenue, which is fine because they've raised plenty of money in private markets and they were pursuing a growth trajectory. $86 million worth of net income in 2020 and on pace for $52 million this year. So this is a company that is selling software packages, that's selling packages to hiring employers and has that in some way, shape, or form predictably coming back to them as companies continue to want to fill their bench with talented people. And that is a profitable enterprise when you can do it at scale. Want to hit a couple comps. The starting point for plan with ZipRecruiter, $249 per month at a minimum, and an average revenue per employer on their platform over $1,093. A little slow today, I'm sorry. The recurring revenue is challenging because there is a degree to which job boards generally, you have a role, you get the role filled, you get off the job board, but the large companies have perpetual go-to-market motions for their recruiting, and that's why ZipRecruiter has been able to amass so much revenue regularly. Their comps, Glassdoor, which many people are more think of as the place where you review jobs as opposed to go for a job, went private in 2018 at a $1.2 billion valuation. Monster, one of the OGs of the early .com hype cycle, went high, came low, sold in 2016 for $420 million. Not a lot of other players really owning this space, particularly in public markets, outside of some of the tech behemoths that have it as some tangential part of what they're doing. LinkedIn, Google, Facebook.
Totally. I feel like a lot of people, if you are familiar at all with the content we post on this channel, you know that we talk about LinkedIn all the time and how it is the best place to build a presence there if you are looking for professional opportunities, and you can't go wrong by being consistent on LinkedIn. And we personally know so many people who have successfully found jobs on LinkedIn and successfully hired people off of LinkedIn. That said, I feel like in this day and age, especially now with most of the world being digital, I feel like LinkedIn is not everyone's go-to anymore, because it's certainly good to have a social presence on there and to be consistent with your posting. But if you are like a tech company who is looking and growing fast and you're looking to expand your team quickly, ZipRecruiter is the better option, because with its software, it automatically matches you and sends out these job alerts to the people who are exactly right for that position. And while it doesn't seem to have the level of like personalization that LinkedIn does with like the consistent posting and how you can build somewhat of a rapport on there, because there is the social networking aspect of it, ZipRecruiter in my head is so much better for like quantity over quality. And yet you're still getting quality with ZipRecruiter because they like have that software that looks at your profile and matches you up perfectly. And that really comes down to the basis why they're an industry leader, why you've probably heard them. We talked again about Squarespace. A lot of similarities there. It's really interesting. They hammer you with those podcast ads because they both want to have market leadership from a brand standpoint, right, but also that exact motion of, it's not just you post the job, it's not just you post, like you go to a job board and navigate around. There is a degree to which they are using machine learning to make those matches better and make the hiring process more efficient. We want to move to the bull and the bear case here. But before we get into that, I think the fundamental question of the ZipRecruiter public offering and where you just kind of stand on it is the question of network effects. So while ZipRecruiter might bring more powerful tools, they're claiming in their prospectus about having these network effects associated with their platform, which I'm a little bit more skeptical of. I see them more as a big data machine learning platform company than a network effects driven company, which is on the spectrum of valuation multiples and froth and salivating in markets generally. That network effects is near the like creme de la creme platform. Legit big data, machine learning, or AI as people would say, is right there behind it. I think that's the big question here as you're making this evaluation. The bull case comes down relatively simple to me. Number one, this is a SaaS multiple type of company. We love B2B SaaS on this show, in markets generally, and the capacity to run a B2B SaaS company with a legit high margin, a strong margin, a demonstrably significant margin is an absolute winner. Those are the companies that can print cash when they want to. Yep. So there's an amazing starting point right there. Number two, this is a freaking huge market. It's bonkers.
Estimates, estimating market size is a little bit of dart throwing, but I've seen 35 billion, I've seen the potential to grow to 43 billion, and there will be tons of competition. If Google, Facebook, and LinkedIn are competing in your space, you are not going to be able to get completely dominant market share in something like this, but to have a significant piece of that pie is nothing to sneeze at. And then finally, and I'm not perfectly certain of this, but I think the difference in revenue growth is somewhat indicative here. I think that they benefit from a tighter job market. So when there's a ton of unemployment, and basically that means companies aren't hiring necessarily, you don't have to do as much as an employer to recruit because there's just more supply there for you to go after, and that's who's paying them in this instance. But as the job market gets tighter, 2019 much tighter than it was in 2020, and we're already seeing the job market tighten significantly from the lows that we witnessed in 2020. When those markets are tight and recruiting entities have to do more to get talent into their pipeline. And we see that anecdotally at Piper. People come to us saying, like, how do I recruit? How do I brand myself to be a good employer as opposed to a good service provider? They're going to be more relevant in that type of world. And that seems to be where things are trending generally. Those are all massive bull signals to me. The flip side is, number one, there's all the statistics about how many jobs are never listed on a post at all.
Yep.
The presupposition of the ZipRecruiter experience is, we'll scan these, we'll post you to 100 different job board sites. And like that's indicative of the fact that that's the constraining variable on the supply of their job listings.
To be fair and to push back against that, and this is more of the bull case, is like there are so many tech companies that have gone exclusively digital now.
Right.
And that is, in my head, I don't really have data to back this up, but it just seems like there is less of that like personable and like having people at the drop of the hat to fill a position, just because you are one step disconnected. You're not in person anymore.
True. I'm just saying, like, Steve works at the company, and Steve is like, you need to hire my friend Susie or whoever it is. I think that's still a part of the factor that if it's that 35 trillion or whatever size market, did I say billion or trillion? Billion. If that is the size of the market, there's some segment of it that is relatively inaccessible as long as people prefer to hire in that way. But that being said, they're the closest to that from a tech standpoint. A job posting is obviously not a referral, but if ZipRecruiter is almost acting like that referrer for you, which I think is where they're aiming for from a positioning standpoint, they can start to overcome that. But I think that's one of the primary challenges. And then the second part for me, and I kind of alluded to this earlier, I don't think that this is a network effects business. I think that if you're buying it on that basis, if they're selling themselves through that lens, I don't see the same type of network effects, because one of the other cores to that is the recurrence of activity in the network from both parties. So the network effects of Uber are that they have a ton of riders and a ton of drivers. It has to be two-sided. And with ZipRecruiter, there's this fundamental issue of someone gets a job and they're out. Someone hires for who they want and they're potentially out. There is liquidity in a marketplace like that, a platform, but the network effects of like, man, I'm benefiting so much more as people drop out of the network, I'm a little bit dubious of. But I still think it's a great company. I love seeing profitable businesses come. I love to see companies go direct listing, because that's them. No one is forced into a direct listing. That's like another kind of metric for evaluating companies like this. And so I hope they do well. They literally probably advertise on like 95% of the podcasts that I listen to. So I'm sure that it'll be a half decent offering. Yeah, I agree. What do you think of ZipRecruiter? Have you used ZipRecruiter before? Let us know in the comments. And you should also like and subscribe, because we post the rundown. And we've got a really good one Wednesday. Yes. I'm so excited for the one on Wednesday. We have a really good rundown on Wednesday. And if you want to find out what that is, you have to hit subscribe. I'm not going to tell you. You could even ring the bell, and then you'll be the first one to know. There you go.